Hi everyone. So markets finally broke to the downside massively on the catalyst of the FOMC. You can see the consolidation here, massive bars to the downside, finishing right at the level 585.91, about 3% on the day. Let's take a look at the Fed comments and see if there's anything we can do. Obviously a big change in structure to the downside. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the Fed did cut by a quarter point, indicating fewer reductions to come. They did cut it down to 2 cuts next year, which was a little bit less than expectations, the dot plot going a little bit higher. And markets were already a little bit overconfident in the cutting cycle. And they did say they were going to give us 3 cuts, which they did do. The first cut was a little bit bigger at 50 basis points, but technically 3 cuts. And you can see it's actually nearly identical to this price action here, which I think is probably why we're seeing markets start to panic. You can see 50 basis here, a couple of 25s, and then we saw a bigger move down. I think that's really what markets are looking for. Is that going to push us into recession at this point? And then, like I said, 2 more cuts in 2025, 2 more cuts in 26, and then another in 27 to bring us all the way down to that 3% rate, which again, like I said, slower than markets anticipated. And they did talk about it here. There was one dissenter saying they did not want to cut. They wanted to hold at the current level. And obviously markets did not like this at all. Markets sold off sharply. But I think the bigger story here is that Fed Powell was a little bit wishy-washy when it came to the labor market. He said GDP is growing, we have a strong economy, continues to look good, and that we have avoided a potential recession. But the bigger news is that he said the jobs market is slowing enough to the point where we are going to see the unemployment rate start to tick up. Not what you want to see if you're looking for higher prices in the stock market. They projected as high as a 4.6 rate over the next year to 2 years. And if that gets out of control at all, that's going to be a major drawdown for markets. And the fact that they're estimating that much of a rise in the unemployment rate is significant. And it seems significant enough to see major sell-offs across markets. And overall, I don't think this was really that surprising. And I'm not sure why markets did not like it so strongly. Like I said, I think the unemployment rate is really what's spooking markets overall, but I think we kind of understood that. I thought we kind of understood the unemployment rate might go up a little bit more, but of course we saw major sell-offs when we jumped into that 4.1 range. The first time we've held steady in that area, and now it's probably looking like we're going to see about another 0.5% higher on that rate, and that usually is the early indicators of a potential recessionary environment, despite the fact that the Fed and Jerome Powell specifically said he thinks we've avoided a short-term recession. Otherwise, taking a quick look at the normal metrics, obviously into fear on the fear and greed index, extreme fear pretty much across the board. Momentum was the only one that was holding up. Strength and breadth were cratering, and those have already gone much lower. Put call ratio didn't actually spike that much, but I assume that it will. Volatility obviously spiking. We kind of saw that coming, but not all the way into the 27 area. Big move there. Safe haven demand, fear continuing to go lower, makes sense. And then looking at junk bonds, still no movement, still sitting in extreme greed, pretty interesting there. Moving over to max pain, significant shift here, 579 max pain with price sitting at 586, so move significantly closer there. You can see pretty bullish numbers now across the board with a significant push down except for that Friday session. We'll see if we get any kind of bounce into tomorrow or the next day, but for right now, still bearish heading into that Friday session. Moving over to the charts, not a whole lot to say here when you get these massive big down bars, 3% here on the SPY. Down to the level, 585.91, filled all these gaps that we had back here. At this point, I would say we're probably going to get the gap fill back to the 5 November area, which would bring us down to that basically max pain, almost right on the money there, 576. Again, I would expect some levels to break, massive volume as you would expect as well. Momentum, very, very bearish, not even oversold quite yet. Seeing just a small bounce after hours, but I wouldn't expect anything out of that. I would expect this to fill those gaps back to here, and then we'll see what happens. Obviously, big change in structure, big change in trend, especially once we take out this low here, which I do think is going to happen. Overall, big down day, big shift in markets. And then looking at the hourly chart here, you can see pretty sideways choppy, holding the levels, and then 2 big down bars, 1.5%, and then 1.69% there. Again, big wick after hours, slight bounce into the pre-market. Even if we saw any kind of bounce in here, obviously expecting that to be met with sellers. Super extended extended, got all the way down to like a 10 here, 12 on the RSI. At one point it was a little bit lower, but then we ended up seeing that wick. But either way, everything looks terrible, and I would expect more bearishness to come. And then moving over here to the SPY charts on the Tasty charts on the daily, all of the lower time frames are not really super helpful, obviously super extended on those levels, but you can see we pushed right to that daily lowest ATR band, which is currently sitting at 588.79. So we closed below it, bounced a little bit to it. Huge volume as you would expect as this continues to sell here. Momentum bearish, shift in structure. We haven't seen bearishness since back here at the beginning of November. And that was very short-lived, saw a bounce from there. I think this is going to be a major shift. I think this is going to be a medium to long-term top, long consolidation, huge volume thrust out of it, big selling. Again, I think this is probably done, at least for now. And I would say medium-term, probably a couple of weeks before we see this change in structure. Who knows? That's just my opinion, at least for now. You could argue maybe this is still upwards. We've seen this pull back this kind of range before. Find the bounces, but this feels different. And then moving over to the NASDAQ, 3.6% to the downside, absolutely massive. Pulled back to that 514.92 level, almost to the penny. Low of day was 515.01, so missed it by about 8 cents there. Huge step down on momentum, RSI breaking down, huge volume as well, 54 million shares traded, huge volume, taking us back to the highs from mid-November. Doesn't seem like that big of a move on the grander scale because we have been going up for so long, but again, I think this is a big change. I think we're going to see lower lows to come. Short-term bounces, maybe a possibility. Again, it is bouncing kind of like the SPY, but probably just seller's exhaustion after you see such huge moves. Went from super extended above all the EMAs to back below the VWAP and 21 EMA. Again, your level right now, 514.92, and I would expect lower lows to come. 55 EMA still in here at 503.52. Wouldn't really want to touch this until we got into that zone. And any rallies, like I said, I would be looking for sells, looking for short positions, selling some calls against it, as I would expect this to continue. Big bars to the downside. Looking at the hourly chart here, you can see the trend did hold up on the hourly. The level did hold up on the hourly on the after hours. So during the session, we didn't touch it, but we overthrew it during the after hours session, seeing a small bounce here into the after hours a little bit. Wouldn't expect too much out of that. It is super extended. You can see RSI getting into the 12.5 range again. Short-term bounce, certainly a possibility. Could be pretty ferocious considering how much this moved here, but either way, expecting sellers to come in and push this back down after today's action. And then moving over to the NASDAQ, you can see on the Tasty charts, we pulled right back to that ATR trailing stop, 515.50. So technically still holding in bullish conditions, which is pretty surprising considering how big this move was, all the way back to the mid-range here. 34 EMA sitting right in there as well. At 513.72, volume, huge spike at 3.5 times normal volume, momentum stepping down, big shift in sentiment. I think markets are going to continue to go lower here. So we'll see how it plays out. Again, $19 in one day to the downside. I think that's going to be a big shift in sentiment. Moving over to the Russell and the Dow, even worse here, 4.4% in the Dow, 2.6%. So the Dow held up just a little bit better, but it had been falling worse than everything else into the session. You can see that's 10 days in a row now. Longest streak since 1974 for the Dow. Again, big volume there. Took out all these levels. Next support level would be 418.38. Took out all the short-term EMAs. Medium now in here around 412. Again, just like we talked about on the other charts, you have a big gap fill back to that 5 November candle, and I think it's going to go there at this point, 521.94. The closing price of the candle was 422.04, so you need to see a touch of that for me. And it's below this structure. I would expect everything to continue lower. It's already oversold at a 29, but again, these kind of moves can continue into oversold conditions pretty significantly. And then the Russell, circling back to it here, broke all these structures there, pulled back, round trip this move, going back to the beginning of November. All of this is now gone. Got the gap fills back into this consolidation range. Resistance 221.49, support to 18.13, 144 EMA in there as well at 217.82. Wouldn't touch anything until we get a touch of that 144. Expecting to see a touch of this low consolidation. And then even if we did see bounces, like I said, I think it's going to be selling opportunities, and I think any kind of buy opportunities should be short term in your mind. Look for those kind of ferocious big moves to the upside hit those key resistance levels and then take your profits and get out, because I think markets are going to be going lower over the medium term. Moving over to the Mag 7, suffered even worse than everything else. 4.38% to the downside. Momentum stepping down, RSI stepping down, huge volume at 589 million shares. Obviously, these are the biggest companies in the world, huge volume, but pulled all the way back to this lowest trend here. Didn't quite make it to that upper trend. Again, a sign of weakness. My guess is that this is going to break down. Might see a little bit of choppy, but probably going to break. 21 EMA sitting there at 312.68, and this still has plenty of room to go to the downside in my opinion. Moving over to Apple and Microsoft, 2.14 and 3.76%, continuing to fall after hours, about another $1.50 there. Expecting this to continue to lower, momentum breaking down, RSI breaking down. Let's go ahead and extend out trend support, because that's your next level to watch for in here around 241.70. I have a level there, 240.79, and then 21 EMA going to trend up into this area as well. Currently at 240.79. And then looking at Microsoft, big breakdown back into this range. Hopefully you took your profits if you were riding this move here at 453.30. Pulled back to the level, broke through there, 21 EMA, your next support at 434.24. Waiting to see what happens there. Again, I would expect everything to break down further, at least into those key levels. You got some trend support in here as well, 432.18. Microsoft is seeing a little bit of a bounce after hours. Interesting to see that, with Apple going lower, Microsoft holding up a little bit, but again, I think everything's going to be short term, looking for more sells. Moving over to Tesla and NVIDIA. Tesla down 8.28%, massive move there. Looking at NVIDIA, this was really trying to hold up. It was doing its best. It was positive 3.25%, really trying to get back into this trading range, and then it just succumbed to the selling of the markets, ended up down 1.14%. Held up really well, again, seeing a little bit of a bounce there to the level. Maybe this is the place to be right now. NVIDIA, momentum still bearish, RSI still bearish. The structure still looks terrible, but seems to be holding up better than markets. If you had to be long anywhere, it's not a terrible spot, but overall, trying not to be long markets. Moving over to Amazon and Google, same story, different charts, 4.6 and 3.5% respectively. Looking down to these trends here, momentum bearish, RSI bearish, big breakdowns here, took out the level there. 9 EMA, 189.70, looking for that 185.22 level, momentum bearish, RSI breaking down. Again, everything looks bad. Everything had a major move to the downside. I think markets have pretty much culminated. We hit these key resistance levels. Technically, you were expecting a breakdown anyway, and now you got a huge catalyst from the FOMC saying unemployment's going higher, and we're probably going to see a recessionary environment within the next year, potentially. Moving over to Meta and Broadcom. Meta down 3.5%. Broadcom nearly 7%. Fully retraced the move back from the Monday session, filled the gaps back to the Friday session. See if it fills any of these gaps. Probably wouldn't say that's going to happen. Did touch the support level here. You could try to trade off of that 219.95 for tomorrow. That's going to be around the 220.40 area. After hours falling a little bit, I would be patient. And then Meta breaking the levels here. Broke trend, broke the level, 602.95. 21 EMA is your current support, 597.22 right now. It's above it after hours. On the actual candle close, it did close below it. Momentum bearish, RSI breaking down, and you can see volume ramping there as well. Everything looks bad. Moving over to staples and discretionaries, this is what you don't want to see, where you're getting an everything sell. Rotation is not bad, and you want to try to stay in the right markets, but when you get these kind of everything sells, that is a terrible indicator, and that's what we're seeing here. So you got staples down 1.5%, right to the 144 EMA. Discretionaries down 4.5%, breaking down from this structure here, almost into that VWAP and 21 EMA. Momentum bearish, RSI bearish, huge volume ramping on that selling action. You also got the island reversal here, gap up, gap down, continued to sell. Everything looks bad, and that trend continues. Moving over to transports and oil and gas, these terrible markets continue to be terrible, as you would expect. They did forecast continued selling, and they did give us that continued selling. 2.5% and 3.8%. You can see oil and gas eclipsing this previous low, so now you have a low, lower low. Coming off of a high, higher high, so oil and gas projecting lower economic activity, momentum bearish, RSI bearish. Same with transports, pulled right back to that 200 SMA zone in here at 67, 61. It's been a very long time since we've been below the 21, 200 SMA, going back here to mid-September. You had really choppy action in here for a while, held the 200 kind of, and then rallied off of it. Now we're back into that zone, looking like it's going to break below that. So Again, negative indicators. It is extended, but big catalyst to the downside. Moving over to breadth, absolutely massive on breadth. Huge candles. Haven't seen candles like this in a very, very long time. You can see 20-day breadth getting back to the lows from April at that 8.15 area. Didn't expect to see that massive of a candle. It's already super oversold into that zone here. You can see this was a bottom for markets. Maybe we get a little bit lower into the 6 area, but this is typically where we start to see markets bottom out. Super strong candle, closed on the low. It's probably going to get a little bit worse before it gets better, but something to consider. It is a turning point there. And then looking at 50-day, let's go ahead and go full screen on that. Haven't been this oversold in a while. 15.19, again, similarly to the previous charts, haven't been in these levels since all the way back here, October of 23. This was a significant bottom for markets, well below those April levels. Huge sell-off. We've been talking about these lower highs and lower lows, but now we're seeing that significant change in structure. I think any rallies are going to be met with sellers. I think we're going to see a fairly consistent downtrend here for a little bit. So maybe markets have finally topped out. Everything looks very bad. And then moving over to 200-day breadth, again, huge down candle. Wanted to highlight how all of these levels have broken way below all of these lower lows that we had been seeing. Super oversold already at a 19.14 on the RSI. Momentum very bearish. Again, wouldn't shock me to see a little bit of a short-term bottom, but either way, expecting sellers to come in and push this back lower. Definitely a change in structure. We had a long time in these very high levels before seeing big moves down like you had back here. So last time before this long consolidation, we touched this area, pulled back all the way into the 25 area, and then we saw the bounce. My guess is that this is probably your targets in here, 35.36, my level 36.23. And then if we get into this 25 area on 200-day, that's going to be an opportunity. So again, I think this is more of just a starting point for a bigger sell. Moving over to yields here just for a moment, you can see 2-year and 10-year going higher on the news that we're going to see less cuts. Makes sense. Momentum bullish, RSI back to bullish. We saw a slight pullback here, but now we're pushing higher again. 10-year continues to rally back to that 4.5 area. If this breaks here, maybe we're headed back to that 5 area. That would be pretty crazy. The Fed still said they're cutting, so let's not have everyone freak out all at once. Obviously, that's not the way of the market, but yields are still going higher, and that's obviously going to be detrimental for markets. Moving over to the dollar, as you would expect, very strong result for the dollar. We said as long as 106.84 held, which it continued to do, this was going to be bullish, and it did basically show that, right? So you had a consolidation, higher highs and higher lows as we moved into the FOMC announcement and the changes. Very strong push above the trends here, and this is finally starting to reflect in equities, these massive pushes here on the dollar. Huge move, 1.18%, continuing to break above these levels, back above 108, closed above it. Right now, 109.5 is the next zone. Takes you back to these levels that we have not seen since November of 22 and September of 22, before we had this kind of peaking price action back here during this time period. And this was basically a market bottom. So if you remember that time period, markets bottomed in here around October. We saw the dollar starting to sell off, and then you had a very long move higher in equities while the dollar was kind of chopping sideways. And now you have a big move up in the dollar over the last couple of weeks, couple of months, and continues to push. So looking up for this trend here, 109.50, somewhere in there. Then moving over to here to bonds, you can see bonds obviously cratering as yields go higher. 1% on JNK, 1.63% on TLT. Broke the level here, closed right on top of it to the penny, which was cool, at 89.16, down 1.6%. Again, we're getting into those zones where this is medium-term buying again here in April of 24. Long-term buys in here, we'll see. Continuing to sell a little bit after hours, about 20 to 30 cents, somewhere in there, back into this zone. I still think that's going to be an opportunity medium term. Like I said, there still will be rate cuts, about 2 per year for the next 2 to 3 years, depending on how things go. If we see major rate cuts, maybe this comes full circle and we start to see rallies, but for now, TLT, big sells. And then looking at it here, JNK, like I said, 95.61 broke, momentum bearish, RSI bearish, big volume. It's right below the 200, haven't been below the 200 in a while, going all the way back here where we had just a short touch in August. And then we had a short touch here in April, and now we're back at it, looking to sell some more. 94.82 would be your next support. You can see I had a short-term level there. It's right on top of that. Either way, I think we're probably headed a little lower. Moving over to the VIX, massive spike there, 73%, huge move. 28.89 is the level at this point. We said we're probably going to get to 18.5, maybe the 20 range. Expected the move into here, expected some bearishness, but this was colossal, obviously a huge move. We'll see how high it goes. Can it get to the 33 area, somewhere in here where we were back in August? Who knows? Otherwise, huge sells, huge momentum. Everything says this should go a little higher. It's obviously overbought at an 81.17, but big spikes like this are usually followed by more big spikes. So you can see it here, got into the zone here, followed by a massive spike, continued to hold in this area before we started to see some sells in there. So either way, looks very, very bearish for equities and bullish for the VIX. Moving over to my accounts, you can see I lost about $2,000. You can see 1.6% or so. Still held up okay relative to markets. Again, NASDAQ was down 3.6. I was at about 1.6, so saved about 2% there. Overall, not terrible. I should have done better. I saw it selling early, took off the Roth position, and you can see only $177 on that trade. Absolutely a good save there, but I just held the Qs far, far too long. You can see I held a call into tomorrow at 521 for a $1.30 credit, trying to save just a little bit of money out of that. I took the shares off, obviously, and then held the calls. That may or may not be a good play. You can see it is bouncing just a smidgen after hours, about $1. If this rallies a little bit, I might roll it up and out. But either way, I think we're going to see more sells. I think we're going to see lower highs to come. Right now, just a little bit of short deltas, watching this one closely. When you start to get into bear markets, your rallies can be really, really aggressive. You see those ripper markets, those relief style rallies, and you do have to be careful with those. You don't just want to sit short through them, but once you start to see them turn back to the downside, again, you can see them accelerate really, really aggressively. Markets usually take the escalator up and the elevator down, so be aware of that. If you're seeing ripper rallies and ripper sells, we're in a bear market. I think it's a little bit aggressive to say we're in a bear market quite yet, but I do think that a trading day like today can absolutely shift sentiment for the next 3 to 6 months. Let me know down in the comment section how your day went. Was it as bad as mine? Were you able to save yourself a little bit? Not really much to say besides markets were terrible and they do look terrible, but let me know down in the comment section. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.